If you're a business owner contemplating the sale of your company someday, then you need to decide which type of business intermediary is best suited to prepare your company for sale and represent it to the market. You have three basic choices: business brokers, merger and acquisition advisors, or investment banks. Let's talk a little bit about each one. You've undoubtedly heard of business brokers. They tend to represent small, Main Street businesses like retail stores, restaurants, and the like. The business brokerage industry evolved out of the commercial real estate industry, and in 17 states, business brokers continue to be regulated by state real estate boards. So business brokers will develop basic marketing materials that describe your business, they'll set an asking price, and then advertise it on a variety of industry websites, much the same way that commercial real estate is sold. So if you have a small business with, say, less than $5 million a year in revenue, or if real estate makes up a disproportionate share of your business's value, then working with a business broker to sell your company might be a good choice. The second category of business intermediaries are merger and acquisition advisors. This is a new category that was created to fill a historical void that existed between business brokers and investment banks in the marketplace. In the past, if you were trying to sell a company with 10, 20, even $30 million a year in annual revenue, your business would be too large and complex for business brokers to represent, but not large enough for investment banks to really take interest. This often left business owners to fend for themselves. Merger and acquisition advisors were created to bring sophisticated merger and acquisition services to companies as small as $5 million a year in revenue, all the way up to companies as large as $250 million a year in revenue. Much like investment banks, merger and acquisition advisors create in-depth marketing materials for your company and manage a confidential limited auction process that's designed to solicit the very best price and terms for your business. The third type of business intermediaries are investment banks, and those range from Wall Street Goliaths like Goldman Sachs to smaller regional investment banks that exist in most mid-sized cities. Investment banks represent larger companies with at least $50 million a year in revenue, up to the very largest corporations that exist. Selecting the right kind of business intermediary largely depends on the size and sophistication of your company. If you own a small Main Street business, then a business broker might be a good choice. If you have a very large company to sell, then an investment bank might be your best choice. If, on the other hand, you're one of the many business owners who needs more sophisticated services than a business broker can provide, but your company isn't large enough to get personal attention from an investment bank, then merger and acquisition advisors were created with just your company in mind.